Let's break down the stock of Tesla. What's happening with it? I'll show you my portfolio. We'll also look at the options chain. I'll show you the 3D volatility. Let's examine volatility. Volatility smile and implied volatility skew. I'll also show you the market price forecast, what the market predicts for Tesla. Based on options, we'll devise an interesting strategy using artificial intelligence. I'll show you what's happening with my portfolio, how I manage it, how much more I can earn on Tesla stock. Let's start from the very beginning of Tesla's stock. The consolidation continues. Again, in the previous video I recorded, I said there's a good chance of price movement downwards. And after that, Tesla's stock rose by almost 10%. And I saw comments saying I was wrong, my friends. You don't quite understand the logic. I'm not talking about tomorrow or next week. We're talking about a longer-term perspective here. Moreover, I'm not forecasting the price. It's the options and volatility speaking. Let's precisely look at them. What's happening with volatility? Volatility for the next week is low, around 40%, but in 2 weeks, volatility reaches up to 60% on some option strikes. This is undoubtedly related to the earnings report. Remember that options always factor in price movement around the report, hence the increase in volatility. These options will have much higher volatility, and that's why it's rising. Let's also look at the volatility smile. It shows us very interesting signal. We can see that nearby options are increasing both towards the upside and the downside. However, longer-term options are not increasing at all. We observe that the volatility there is completely flat. But towards the downside, we see a solid increase in the path of options, indicating that investors and traders hedging their stocks are buying options, thereby skewing the volatility smile. This distortion in the volatility smile is quite normal. Now, let's examine historical and implied volatility. Currently, historical volatility is represented by the gray line, while implied volatility is the white line. As we can see, these two volatilities are currently equal, which is a perfectly healthy position. So it should happen that the implied historical volatility is the same. But on the other hand, it's not very good because we can't profit from volatility movement. I always tell you that you should earn not from the movement of the stock price, but from the movement of volatility, because predicting the stock price is impossible where it will be. But predicting volatility is very possible, because volatility always returns to its historical value. I will demonstrate this to you with an example. Let's choose Tesla stocks. Choose not the price movement, but, for example, volatility. Let's say that volatility will increase by 20%. And artificial intelligence itself creates strategies for us. And we have strategies with a probability of 70%. As we can see, here we are advised to buy one put option with a strike of $170 for May and buy one call option with a strike of $175 also for May. The profitability will look like this, but I would actually look at some other strategy. For example, we can buy one put option with a strike of $190 for May and sell two put options with a strike of $170 also for May. Our profitability looks like this. As we see, it will earn practically everywhere. But again, these are quite complex combined strategies. We can see how the price, volatility, and movements will be distributed across all options on all dates, expirations, and strategies. Yes, it's not easy. I agree with you. This is real professional trading. I'm afraid I might scare you off with all this, but again, in the future, I will do my best to explain everything to you as clearly as possible. Okay, let's get back to volatility and look at the trading volume in options. As we can see, the highest volume is concentrated at levels of $170, $175, and $180 for call options. For put options, we have a very high volume at the $170 level. Let's highlight these volumes. They are right here. We also have volumes at $165, $160, and actually the price moves accordingly. Do you wonder why the stock couldn't surpass the $175 level? Obviously, it's because of the concentration here. A very high volume in the options market, including market makers, simply didn't let the stock move further upwards. Most likely, with a very high probability, before the report, we will continue to consolidate at these levels. After the report, the main price movement will begin. I also want to draw your attention to the fact that a very high volume is concentrated on the nearest options. This, of course, doesn't add stability. These options will definitely be exercised. Market makers will have to hedge or conversely sell hedges. I won't talk about delta neutral strategy. Let's rather move straight to 3D volatility. Here we have all the available information on the stock market. Volatility of options, strike prices, dates, expirations. Professionals will immediately understand how to trade here. What strategy can be built? Let's see what the market forecasts for us. But before we look at what the market forecasts for us, let me show you my portfolio and what's happening there. My portfolio currently looks like this, while there are still two Tesla stocks there. Let's see how trading is going. The first combination for this week closed for me, which brought me a total of $89. This is my fixed profit from Tesla stock, and in total for all the time Tesla stocks. Position management, strategies, options brought in together with $745. Look, absolutely all our positions are in the plus. Absolutely all positions are profitable, which once again proves my philosophy of sound portfolio management. Let me create an additional line. Tesla stocks closed at $171. We enter this into the table. I remind you that I started an experiment on outperforming Tesla stock. The starting amount is $10,000. And during this time, my portfolio grew by 7%, while Tesla stocks fell by 14%. My strategy and my position outperformed Tesla stocks by 21%. The blue line is my strategy, the red line is Tesla stocks. Certainly it's not entirely my merit here, because during this time Tesla stocks have fallen quite significantly, but even apart from that, look at the steady growth of my portfolio and my strategies. It's smooth, consistent growth, and as Tesla moves, it falls, then rises, then falls again. I use combined strategies. I buy Tesla stocks themselves, plus I use option strategy. This week I didn't open any positions. This is related to the upcoming report. And before the report, I probably won't open any positions, there's no point in it. Again, I always repeat and say, friends, the most important thing is patience. You need to wait, see where it goes. The main thing here is not to panic. That's why I am successful, because I don't panic. That's why all my strategies close positively. I'm very pleased with this and I really like it. Let's move on to market expectation. Let me now show you the probability distribution of prices. This is mid-May, so in about a month. As we can see, the highest probability is that Tesla will be priced between $165 and $170. That's 7.5%. We also have a 7% probability that the stock will be priced from $160 to $165, and a 7% probability that Tesla stock will be priced from $170 to $175. But the probability of a decline is higher for us. I always want to remind you of my philosophy. I don't know where the stock will go. I don't know how to predict price movements. I only work with probabilities with a mathematical expectation. My greatest success is skillful position management. I show you everything visually. I just don't know what else to show. I show the portfolio, I show the transactions. You can look at this table attached in the description. Everything is absolutely free. In more detail, I just don't know what to show. I show you absolutely everything as it is. So let's get back to this. As we can see, the market probability assesses that the stock will fall. Again, my friends, you can believe that the stock will be $200, $300, or $500. But let's not argue with the market. Again, I'm saying this is what the market. It's not my forecast, it's the market forecast. You can, of course, here using technical analysis, draw a fairy tale from the average. Or you can just trust the market. If you think the stock will rise and you bet money on it, my friends, you are going against the market. But if the market just gives you hints, why bother with complexity? Let's work according to the market. If we simply ride the market, you will make money. My friends, you came here to make money. Your goal is not to trade in the black, because you won't always be able to trade in the black in probability, but to make money. But if the market shows you where the price will move, I've already told you about it, and I've shown it as clearly as possible. But why argue with it? I absolutely don't understand that. But again, this is not investment advice. I'm not saying you need to buy or sell stocks. I'm showing you what I personally do in my portfolio. So let's wait for the report. I will definitely tell you about the report, what happened with us. Let's see where the stock will move. Let's look at its earnings. Also, I want to remind you that when I get monetization on YouTube, I will direct all the money to a new account. We will open a new account where I will form the portfolio. I will show you the ratio of cash to stocks, which stocks I buy. Everything will be as realistic as possible. The account will be absolutely real. I will tell you in maximum detail and show why you should trade and invest exactly like this. I'm sure we'll succeed. We will definitely outperform all the indexes. I also advise you to watch my previous videos about Tesla stock. I talked about a reliable strategy there, where the stock might go. It also summed up I recommend watching all the videos from the playlist Tesla to understand the entire logic of trading and opening positions. Good luck to everyone.